All right, we are live. We're going to get started here in just a second. I want to give people an opportunity to log in. I've got a couple of my team members on, those of you who are logging in right now. Jenny Brooks and Greg Sauerback are going to help me with this webinar to see your comments, answer questions, things like that. Jenny, we got people logging in right now. We're supposed to be started in about a minute here. How do the lines look right now?
Yes, we've got a couple people on already. We've got Ron Goodson.
Right now, we're supposed to be started in about a minute here. How do the lines look right now?
Yes, we've got a couple people on already. We've got Ron Goodson. Okay.
All right, fantastic. Here, what we'll do is, Jenny, we're getting that feedback from that other window. So I'm gonna let you mute yourself out because I'm gonna get started here in just about a minute. Well, we should be getting started here. So as long as we've got people coming on, I'm happy. I want to welcome everybody to today's webinar. I'm very excited about sharing with everybody what we can do to make more money in our businesses, and one of those things is really understanding what your food cost is. And so I'm going to share my screen. This is live, so bear with me as we get these controllers working. All right, we should be seeing the PowerPoint at this point in time. I want to welcome everybody again on today's webinar. This is why knowing your food cost is critical to your success and how to simplify the process. I've got to tell you, while the title doesn't sound so sexy, meaning, wow, I want to know my food cost, understand that you can't make changes to your business if you don't know what your food cost is. Right? You can't, let me make sure I'm looking at you here on this. You can't make changes to your business if you can't calculate your numbers. What doesn't work anymore is for you to use your gut and your bank account to run your business. Our margins change all the time. Our food costs are going up every single delivery. We've got minimum wages going up all across the country. We now have the federal government telling us that we may have to take some of our manager salaries and double them in some cases in order to have them exempt from overtime. There are people chewing into our margins, companies, government, everything. And we still have to run profitably, and I'm going to talk about that today. So while the topic may not sound so sexy, you know, hey, knowing your food costs, why it's critical, and how to simplify the process, this is actually an incredibly important part of what you do in your business. Because if you can't calculate it, how can you fix it? You can no longer, again, that gut and that bank account, heck, we can no longer use just our purchases. Because I'm going to show you on this webinar that you could be buying more food than you use, and you think if you're using raw food cost, your food cost is too high. But instead, it's on the shelves to be stolen, wasted, spoiled. You may look at it and so because you pay your bills 30 days in arrears, that because you paid bills for a slower month, coming into a busier month in sales, it looks like your food cost is really low. And you're like, man, I did incredible. But it's a lie. Well, you've got to know exactly what you've got to do on a weekly basis, not monthly, weekly basis, to give you control of your business. And it starts with knowing your food cost. Right? There are three major expenses in your restaurant. There's food, there's labor, and then there's the most expensive. What is that? It's an empty chair. We're not going to talk about that empty chair today. We're going to talk about food cost. And do know everything I'm teaching you when it comes to the food cost side of things is exactly the same for pour cost, liquor, bottled beer, draft beer, wine. We're just focusing on food. So let me go back to the PowerPoint here. And here we go. So let's talk a little bit about my background. For those of you who don't know me, who have never spent time with me, seen me speak anywhere, I want you to know I grew up in my family's restaurant and catering business back in Linwood, New Jersey, where I worked for the toughest manager I know. If any of you have ever worked for your mom, you know exactly what I'm talking about. As a teenager, I hated it. Why? Why did I hate it? Because my mother rode my sister and I twice as hard as anybody else, saying there'd be no favoritism. Now, while I hated that as a kid, she did me a favor. Every job I had after, I rose. I had a work ethic like nobody else around me, so I really appreciate what she gave me. I took those skill sets, worked for a company called Coyote Springs Brewing Company Cafe here in Phoenix, Arizona. Our first location was a cash cow. Our second location was much like owning a boat, a hole in water in which you throw money. And as things went wrong, I learned how to fix things. And that's why I developed what I call my restaurant operational smart systems. These are restaurant systems that are simple, measurable, applicable, repeatable, trainable. And the key with any system is it has to be simple or no one's going to use it. It has to be trainable or you'll get no one to use it. I moved on, went to Scottsdale Culinary Institute, taught management, human resources, wines and spirits. I was a franchisor. In between, the teaching at Scottsdale Culinary was in between two shots at a company called Famous Sam's, initially as the director of operations, where we opened 8 stores. As a franchisor, we were going gangbusters. They damn near bankrupted the company. I moved on to Scottsdale Culinary, was consulting, and the minority shareholders asked me to come back. They were now the majority shareholders of Famous Sam's, said, David, come back. I kept saying no, no, no before my first child was born about a month before, and I said okay. And I walked into a disaster. Company really should have been over. Bankrupt. And I was given the goal of turning the company around and selling it within 5 years. Now, believe it or not, I missed that goal by only 3 months. So I know what it is to be an independent operator. I know what makes the chain successful. It's my job to give you, the independent operator, the same systems and tools that chains use without losing your independence. We love our guests, we love our employees, but we are going to do what they do well, and that's make money. Now, when I started the intro and I went off the PowerPoint back on screen, I talked about why you've got to know what we're talking about. Let's talk about what we're going to learn specifically. I'm going to tell you right now that there is one number you must know to have any chance of making money, and if you only pick up that one piece, the very first piece I'm going to teach in this webinar, then you have won. This was a great use of the hour of your day. But if you get off this webinar and you don't understand what that number is, you failed to pay attention, and it is critical. We're going to talk about how to calculate cost of goods sold, and those of you who are actually calculating your cost of goods sold, taking inventories, I'm going to give you 4 calculations I'll guarantee will put more money in your bank account. I'll talk about why it's important to go to shelf-to-sheet inventory, how we speed up the process and increases accuracy. We're going to talk about how to simplify your ordering process, make sure nothing gets missed, and how to track your sales to make sure we can put all the information together. Now, do know, I'm going to teach all of this. We're going to take about 45 minutes, 50 minutes. I'm going to teach all this. But I want you, those of you who are interested in learning more, how I can show you how you can simplify each one of these things to make it easy in your business and have the knowledge and power at your fingertips to have these numbers at any given time, then I want you to stay with me, and I'm going to show you how we use that in our software. Step by step by step, and then we're going to open up the question and answer. It's really important that you participate in this webinar. So do know, as I mentioned earlier, those of you who are logging in later, I've got Greg Sauerback and Jenny Brooks on my team. They're on the chat window with you right now on this webinar, this YouTube live event. And what I want you to do is I want you to type in any questions you may have. And I'll do my very best to answer them. They're going during question and answer. Jenny's going to feed those back to me, and from time to time they may feed me some information in my. I've got a different chat window that I can see what's going on and answer things as they come up. I may also ask you to participate. I may ask you a question, and I want you to type it in the chat window. And as I'm going to do at the end of this webinar, do know if you're on here and you want to be updated on weekly content from my YouTube channel. If you want to see and make sure you're alerted to any more of these webinars that we're going to be doing, make sure you subscribe now to our channel. Love to have you on there. So now, to get started, I want you to understand you have a responsibility to run profitably. Whether you work with me for the next hour or you're one of my members or one of our consulting clients, I don't care at what level you are with me. You have to understand you have a responsibility to run profitably. Number one, you have a responsibility to your customers. They walk in your door because you fulfill a need in the community, don't you? I mean, they want what you have. You have a responsibility to your employees. That's how they're gainfully employed. They feed their families. Granted, half of them, drink away their paychecks. But the fact of the matter is, we have a responsibility to them. But here's where we screw it up as independent operators all the time. You have a responsibility to you, your family, and any investors you may have. And I'm here to say you come first, not last, my social working friends. In fact, I want to look you in the eye on this. You're first, not last, my social working friends. What do I mean by that? What industry are we in? We're in the hospitality industry, not the food business. You want to be in the food business, you're competing with, heck, a gas station. I can go get food at a gas station. No, we create memories for people. I don't care if you're a fast food pizza place or you're a fine dining restaurant. We create memories and experience from service, from the food, the environment, the surroundings, the people, everything we do. We make sure somebody creates a memory in their mind. Now, we're first, not last. Why do we last? Why do I think of us as social workers in our industry? Because we're in the hospitality industry. We were born, bred, trained to take care of people. Let's take care of others, right? Take care of our guests, take care of our employees. But when we don't take care of ourselves, we put ourselves in jeopardy at times. Because look, if you don't make money, your restaurant closes. There is no restaurant for your customers. If you don't make money, your restaurant closes. There is no job for your employees. So from this point forward, you have to understand in your mind that everything you do now requires you to run a profitable business. I don't know anybody. Like if I got y'all to raise your hand, in fact, type this in. I don't care if it's a smart-ass answer. How many of you, think about it, when you opened your business on purpose to be a charity? Right? That's ridiculous, right? Well, it's not ridiculous. I've had people raise their hand. They're called churches. Right? They're nonprofits. They never were meant to. But you open the restaurant not only to give people incredible memories and people jobs and career choices, not only take care of your family, but think about it, right? You're supposed to make money. So from this point forward, you have a responsibility to run profitably, and you come first. Because without you, there is no job for your employees. There is no restaurant for your guests. Now let me take myself back to the PowerPoint. Now, really important to understand that the two most important things in any restaurant are recipe costing cards and budgets. Recipe costing cards and budgets. Now, we're not going to cover in any detail either one of these things, so I'm going to touch on them very quickly. Number one, do know for recipe costing cards, if you don't have a recipe costing card, you are throwing, let me be clear, for every item you sell, including sauces, side dishes that you create, you are throwing your profitability to dumbass luck. How do you expect to make money if you generally know what a protein costs? If you don't know exactly what it is, we're in an industry of pennies. We are an industry of pennies. So if you generally know, you're generally not making the money you deserve. And if you have no idea why you're not making the money you deserve, you're nuts if you don't know what things cost. The other is a budget. Now, budgets are critical. For our membership, when we work with you, we do a budget for you with you. Why? It's so critical. Number one, how can I advise you if I don't know where your numbers are? What are your numbers? Well, let's think about this. Let's say you get a P&L. Maybe you get it 15 days in the next period. Maybe you get it 30 days, 60, 90 days. I've seen worse. Well, when you look at that information, what does it represent? It represents the past. The past. Can anyone on this call, on this webinar, change the past? The short answer is no, you can't. You cannot change the past. So we need to focus on the future. So what we do is we grab your last 12 months QuickBook files. We say if you operate the next 12 months the same way, we know what variable expenses, fixed expenses are. We know your food costs, your sales percentage. We know all this information. We know if your sales, based on your prediction, going up or down. We build the next 12 months. And then we see at the end of that, what money did you make or lose? I hope no matter what, you look at that number and go, ew, and you want to change it. This is where a budget becomes extremely important. We now make our management team, we take them from being a reactive management team to a proactive management team. What does that mean? It means now we start to look at your numbers and say, hey, you're not making the money you deserve. What should we do? Hey, we're going to implement the key item report and waste sheet and the purchase allotment system. We're going to drop food cost. We're going to train that in this month. Within 2 months, we should be seeing a 3-point drop in our food cost. In the meantime, we're going to work on recipe costing cards, and we should get those done in the next 3 months, and we should be able to look at the menu mix, ideal cost, re-engineer it within the next, let's say at the end of 4 months, we'll have a new menu on the table, which is going to be engineered to bring my food cost down another 3 points. We look at labor and say, my kitchen labor is high. How can I do this? ... Next thing you know, line by line by line, and we identify the changes we make and the strategies and the systems we're putting in place to make those numbers a reality. Then, when we finish our month or week, we create a budget variance report. We see where our numbers should have been, where they actually are, and we see where we miss or where we hit. If we missed, do we have managers not using the systems I put in place? Retrain them, hold people accountable. Are they being used? What new systems do I need to put in place to change that reality? And what's really, really important, all too often, most independent operators, when you see you've lost money, what do? You accept it. The hell with that. What we do is we look over the next 11 months and say, what kind of additional changes can I make, small changes, without changing or affecting our guest service, right? We need to have great hospitality. Product quality, we never downgraded. What changes can I put in place to make up, say, the $3,000 I lost in the first month? Don't just say, oops, I lost it. Go out there and make a change. By the way, by doing this, we make small changes that don't affect our guest. Now, at the bottom of this slide, it says industry standards don't apply. I want to talk to you about this. I'm going to come back out of this and go straight look you in the eye. Industry standards don't apply. I don't want you to see somebody like me at a food show. I speak all over the country, literally all over the world, mostly in the United States. I'm on an airplane all the time speaking at conventions and shows. And I see speakers, and they start quoting the National Restaurant Association. They'll say, the National Restaurant Association says the average food cost for a full-service restaurant is 34%. And then what do? You go home to your chef and go, I need 34%, 34%. Who the hell said that was your number? What is an industry standard? What is a benchmark? It's an average. Is your restaurant average? Do you have the same restaurant as everybody else on this webinar, on the same street corner? Same products, same product quality, price point, style of service, everything the same? The answer is no. Your numbers are different than somebody else on this webinar. You have to understand, we create this budget so we see where your numbers should be. Some of you dug a hole. You're going to have to become more aggressive in order to have any opportunity to make it. Some of you are looking for 1 point, but may discover there's 3 easily at your fingertips. Wherever you are, if you ignore industry standards, they mean nothing. I'm going to teach you next the one number you must know to make any money in your business, to guide your management team, to give them the numbers they need to know. Because remember, a budget takes your management team from reactive to proactive. And that means they actually show up to work every day instead of being babysitters of the idiots. They make change, real change in your business. Their jobs are more fulfilling because they know the numbers. They know what they do on a day-to-day basis has a dramatic impact on your bottom line. And oh, by the way, managers who are on this webinar, there's not one owner on this webinar that would not share those improvements with you in a bonus. But how the hell can I bonus you if we don't have measurements in place, which is the whole purpose of this webinar, is to talk about what? How do we calculate food costs? Putting at least one of those measurements in place. Now, let me go back to the screen. So, prime cost. I told you if there was one thing you needed to know on this webinar, it's this, prime cost. What makes up prime cost? Well, before I do that, what is prime cost? To an old-timer like me, prime cost is controllable expenses in the control of management, how I hire, fire, train, use my people, purchase product, utilize that product. It's actually called a controllable expense. That's for old timers like me, that's how we grew up with it. Now we call it prime cost. Well, prime cost is total cost of goods sold, food and liquor. That means bottled beer, draft beer, wine, everything, plus total labor cost. Now, let me be clear. We talk about total cost of goods sold. In the beginning of this live broadcast, I said, for those of you who are not taking inventories and using your raw purchasing as your food cost, your poor cost, those numbers are wrong. They're a lie. But, hey, you haven't started working with me maybe yet, and you're not taking inventories. You're not taking them at all. You take an inventory once a year. When your accountant calls up and says, well, it's time to do taxes, what's your year-end inventory? You say, I don't know, what was it last year? And you say, oh, add $500. That ain't taking inventory. Well, you've got to take inventories. If you're not, don't worry. What I want you to do is take your last 12 months purchases, raw purchases, food only, liquor, bottled beer, draft beer, wine by category, divide that into gross sales for the last 12 months. That is your food cost. That is your pour cost, because the fluctuation in inventory is actually very small. Now, there's total labor cost. There's raw labor cost, which is that's my definition. Raw labor cost is the ring at the register. If I, or not ring at the register, but punching in and out at the time clock. If I'm a line cook and you pay me $10 an hour, and I punch in and out for work 1 hour, owners, does $10 come out of your bank account? No. $12, $13 comes out of your bank account, right? Because there's taxes, benefits, insurance. Oh, they're a part of prime cost too. Then we've got this person called an owner. Is owner's salary a part of prime cost? The answer is yes and no. If you are an owner that has keys in hand, you are running shift, right? You are the manager on duty, then you are a part of prime cost or an adjusted salary. Meaning, if you were to pay you pay yourself $60,000, but you would normally only pay a general manager in your restaurant $40,000, then $40,000 of your salary is a part of prime cost. The other 20 is not. It's an operating expense. Still salary, but it doesn't belong in prime cost. Why? Because I only want management that is required to run a shift in a part of prime cost. So your bookkeeper, your marketing person, they're not a part of prime cost. They have nothing to do with day-to-day operation with your customer. Now, maybe you work 2 shifts a week on the floor as a manager, then 2/5 or an adjusted 2/5 of your salary is a part of prime cost. Now, what do we measure it against? Gross sales or net sales? Well, I kind of let the cat out of the bag earlier, but I'm still going to go through and tell you the differences. First of all, let's define gross sales. Gross sales is the ring at the register before discounts, not including sales tax. The ring at the register before discounts, not including sales tax. Sales tax is not a sale. It's the privilege the government gives us of holding their money, and if we borrow it, they penalize us worse than the mob. Don't play with government money, right? You all know we've all done it in our careers. It ain't good. So if I were to look at gross sales, if I sold a burger at $10 and I comp $5, gross sales is the $10 burger. Net sales is the ring at the register minus discounts, not including sales tax. So net sales is the $10 burger minus $5. Net sales is $5. Now, do you want to measure prime costs, total cost of goods sold, plus total labor costs, including taxes, benefits, insurance, against gross sales or net sales? The answer is gross sales. Why? Think about it this way. You decide to run the crack cocaine of restaurant marketing, a Groupon at a 78% discount. Now, let's make it a little easier. You run a 50% off burger promotion. I asked Chef to put a burger out at $10 and use $3 in product from the recipe costing card, right? That means it's a 30% food cost. Well, if I BOGO, buy one, get one free, or take 50% off, and I comp $5 of that burger, I take a 30% food cost and what? Make it 60%. Is that chef's fault? Is that your kitchen manager's fault? No. Now, don't get me wrong. When we do a budget, your comps are going to be a line item. They is an expense. When you give away money, that's real money you are not collecting. It's revenue you're giving up. But the fact of the matter is, I asked Chef to put a $10 burger out and use $3 in product. So I want to measure Chef off of gross sales, not net sales. Still not with me? Hey, my social working friends, you've got your favorite charity. You're gonna run a charity event tomorrow. You're gonna close your restaurant for this private charity event. It's one of your favorites. Makes your heart sing. It's gonna be a $20,000 day, and you're gonna comp 50%. You're gonna give up 10 grand. You're gonna comp $10,000 because good of your heart, you're gonna help them raise money and do what have you. Well, do you order food and liquor for a $20,000 day or a $10,000 day? Simple, right? $20,000. Do you bring in staff to handle a $20,000 day or a $10,000 day? Easy, $20,000. See, you have to measure your prime cost, total cost of goods sold plus total labor cost with taxes, benefits, insurance against gross sales if you want to know where your prime cost is and measure success. We will pay attention to our comps, don't get me wrong. That's a budget item. Now, when I first started my business over 13 years ago, the industry standards, the benchmarks, remember I don't like them, and I'll show you why in a second, said prime cost should run 65% for a full service restaurant, 60% for a quick serve. Well, I thought I was a hero. I had my members reaching 60%. Man, great job, David, right? Wrong. Well, we just celebrated, or shouldn't celebrate, we memorialized the worst day in my lifetime in modern American history, and that is 9/11. Why would I bring that up in a live webinar? Because the next day, our industry took a major hit. All of our food costs adjusted up and have never gone down since. I told you earlier we've got minimum wages going up to $15 an hour all across the country, phasing in a lot of places, getting voted in $10, $12, $13 an hour, depending on where you are in the United States. Canada, the whole province going to $15, right? It's coming. And then we've got overtime for management to be exempt. We have to double the minimum salary anymore. We've got all these numbers, all these things taking away from our numbers. These numbers don't work anymore. I'm here to tell you, if you do $850,000 a year or more in gross sales a year, your new prime cost target is 55%. That means if you're running at 65% today, going, I'm joining this live event because I just want to see if there's something new out there. By the way, there's nothing new. It's all the same stuff. It's arithmetic. It's counting stuff. It's how we utilize those numbers that's new. And this is one of those things. If you're running at 65% prime cost right now thinking you got your stuff together, you're wrong. I'm telling you, if you do, let's say you're $1 million business right now, annually, at a 65% prime cost, I'm telling you, there's 10 points on the table or $100,000 in bottom line profitability on the same sales you're doing right now. But you got to do work. Right? You understand, there is no magic pill. The things I'm about to teach you, somebody has to do the work, but the payoff is huge. Now, where do I end up at 55%? That's why I hate industry averages. Who cares? Now, I care. We're going to base it off your budget. So look at this. I could be a family dining restaurant with a 30% cost of goods sold, 25% labor cost, 55 points. I could be a burger restaurant, 20% cost of goods sold, 35% labor cost, 55. I could be a steakhouse, run a 40% food cost, 15% labor cost, that's 55. Why does a steakhouse work? Make sure you subscribe to my YouTube channel. I'm going to explain it to you on weekly stuff, and some webinars are coming up, so make sure you subscribe. But it's a quick concept called cash contribution. The ring of the register is high, even though the food cost is high. It drops gross profit, greater gross profit, but it lowers my labor cost. See, this is what's so important about why we've got to create the budget. And actually, I want to look at you when I talk about this. Look, when we help you create your budget, when you do it on your own, the reason why you have to understand prime cost is this. You might be at 65%. I'm trying to find 10 points. You don't find that overnight. There are some big things we can do, but there's a lot of little things, line by line things we can make changes to. But where should your numbers be? I just said we've got a family dining restaurant, could be a 30% food cost, 25% labor cost. I got a steakhouse, 40, 15. Where should you be? Well, it has to do with your core values, who you are as a person and how you want your business run, style of service, product quality, lots of things go into it. Now, you may say to me, David, you know what? I'm not going to cut my labor. I'm a social worker. We're seasonal. I want people to have salaries, so I'm going to have high labor costs in the summer, winter, whenever your off season is. Well, in order to hit the 55%, what are you going to have to do? We're going to have to look at your food. We're going to re-engineer your menu. We're going to find points. What if you tell me, David, let's say there's only one way to lower your food costs, that's raise prices, which is completely asinine and wrong, right? But let's say it's it. You say, David, I won't raise my prices. Well, what do we do? We have to attack our labor cost. Either way, we find a balance. How do we get you to 55%? You may say to me, David, I love the concept of 55%, but based on I won't cut hours, I'm not raising prices, I won't do certain things, I want to make sure I have an incredible experience, and it's important to me to do these things and not find those margins. I'm going to run at a 65% prime cost. I will pat you on the back and say, good frickin' job, man. As long as you make the decision on what you want to do with your money, I'm all for it. But then we have a budget with targets to shoot for. Now, my managers are given systems and processes to achieve those numbers. Not numbers that I got from some book, report, from some speaker, National Restaurant Association, a benchmark, an average. I don't care about averages. You get 55 points. How do you want to use them? That's really important to you. We'll make sure that happens without giving up product quality, without cutting guest satisfaction, service, or anything like that. You'd be surprised. But it starts with this, understanding that you can do it. If at this point in time you don't believe a 55% prime cost is possible, get the hell off my webinar. Because you're right. It's a self-fulfilling prophecy. If you believe it can't be done, it can't be done. You will find every excuse in the world why it won't work in your business. I got news for you. We used to think, wow, 55, that's a challenge. If you do $2 million, $3, $5, $6 million in sales, your prime cost target starts to drop like a rock. We have a member who has a $5 million Tex-Mex restaurant in Dallas, Texas area that runs a 42% prime cost on a weekly basis. We have bar restaurants in San Diego and New York City that do $4 and $6 million a year in sales that run as low as a 32.9% prime cost without giving us guest satisfaction, without cutting quality. Now, why can a bar do that? Because the labor, right? It takes one bartender to do $1,000 an hour in sales, and it takes 4 cooks on the line. It's not really cost goods sold. But understand, whatever's possible is possible if you believe it is, and as long as we put the right systems in place and we don't cut anything that matters to the guest. So that's prime cost. That's the one thing you better make sure you understand before you leave today's webinar. Now let me go back to my screen. Now, we all understand 55%. The purpose of this webinar was talk about how we calculate food costs. So here we go. Well, the beginning of it is start with our beginning inventory. That's a count, not a count for placing an order. It's actually for value. I know what everything, the dollar value, everything on my shelves. That includes the chopped onions. Right? There's no such thing as in transit anymore. What is the value? How many ounces of chopped onions do I have on the shelf? I need to make sure I count everything, including those spices. Beginning inventory, that was the inventory we took last period. That could be last week, last month, yesterday, doesn't matter. Our last inventory, plus our purchases, and we're on something called an accrual accounting system, earn OUs. That means whether you pay for those invoices or not, if you're just signing for them, they are a purchase during this period, during this month, this week, however you're calculating. I add those together. I have what I could sell, and I take an ending inventory at the end of the period. What is left on the shelves, dollar value. I subtract them, and I come up with the product that has been used, the product that has left the shelves. Now, what's the number one way you hope you use your product? Well, for everybody, hopefully you sold it, right? We're in the business to sell. Well, it could be wasted, spoiled. So if you're throwing away product because you over-ordered and it's out of date, if you've got servers that are allowed to take their own dressings out to the table with salads and you have a 2-ounce portion cup and a 4-ounce portion cup, they're too lazy to go replace that, you're out of 2-ounce cups, and they grab 4, all of a sudden you're losing money, 2 ounces every single dish, and oh, by the way, the guest gets a bad salad because they use all the dressing. Oh man, this is drowning in it. So waste, that's a part of it. Theft, I know none of you have thieves, right? Whatever. Look, it happens in our industry. What we want to do is we want to reduce the theft by having systems in place and management paying attention to those systems. We will keep honest people honest, right? That's really, really important. And if somebody decides to stray, you will nail them right away. And then there are comps, but these are not the comps in your point of sale system. These are you as an owner taking tax advantage of your business. What do I mean by that? Look, as a business owner, aren't there times where we might have purchased something for the business and somehow it got used at our house? We're not supposed to, but it happens. Well, let's say, for instance, you decide you're having a barbecue this weekend. You need 2 cases of ribs, a couple cases of burgers, buns. You need some beer and some Jack, and you throw it all in your truck and you drive home. Well, now you're pissed off at your management team for their food cost high, their pour cost is high. What the hell? So do know it's okay for you to do that. In my mind, I've got no problem. Take the product, but you had better put it on a waste sheet so that when you get pissed off at your management team, they go, whoa, 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 owner, you took $850 in product. You add that back in. I'm actually running really well. That's really important. So do understand this is an equation. It's math. It's blind, right? It is beginning inventory plus purchases minus ending gives me use. What leaves the shelves, how it left, that's why we need systems. Now we take our use divided by sales gives us our food cost percentage. That's as simple as it is. Now, some of you on this call may go, oh, we're doing this. Oh, great. I bet you're not doing the next 4 calculations that I'll guarantee will put more money in your bank account. Now, do know, I did not say I'd make you more profitable. I said I'd put more money in your bank account. What pays your bills, owners? Cash or profits? You better not have said profits. Profits are for paying taxes. Cash pays my bills. Last time I checked, I can't go to the power company with a case of steaks and go, thud, we're even. Right? I've got to have cash. So now, what are those 4 calculations? I can guarantee put more money in your bank account, average inventory. Beginning plus ending divided by 2. That's tough math, isn't it? It's not. It's all easy. It's addition, subtraction, multiplication, division. There's no quadratic equation, no Pythagorean theorem, no nothing. It's simple stuff. What's tough is, in our industry, is understanding it's a word problem, and we have to understand where the numbers come from so we can plug them in the right place. Average inventory goes into our inventory turns. What is an inventory turn? It's not, theoretically, it is your shelves are filled with product. You empty your shelves, refill them, that's a turn. Empty them again, refill them, that's a turn. Well, nobody on this webinar, on this live event, ever empties your shelves, even if you've had the displeasure of closing a restaurant. So that doesn't work. We've got to use the dollar value of what's on the shelf. So if I have an average inventory of $3,000, every time I use and replace $3,000 in value of product, that's an inventory turn. Use another and replace $3,000 in product, that's a turn. Now, where should our turn be? Well, you want to write this down. In a calendar month, your inventory turns should be 4 to 6 turns. If you're a breakfast place, 8. Well, you don't have enough storage space. You're taking deliveries almost on a daily basis for your eggs, so it's no big deal. But do understand, if you've got inventory turns of 1, 2, 3, you've got product on your shelves waiting to be stolen, wasted, spoiled. Pay attention to it. See that you may have high dollar items like those lobster tails. Chef last year screwed up on New Year's Eve, bought way too many, they're frozen. Well, get those the hell off your shelf, even if you sell them for what you paid for. Because I don't care about the higher food cost. What pays your bills, cash or profits? The answer is cash. We've got to change inventory. Did it go up or down? And then we've got a budget variance. I can't do a budget variance if I don't have what? A budget. Now, by adding these 4 calculations, I will show you why some of you may have had this. And in fact, let me look at you when I talk about this. These 4 calculations are so simple, but incredibly vital to you. Let's say, have you ever had managers actually make their bonus? They hit their food costs, their labor costs, and so on. But you don't have money to pay your bills. You don't have money for yourself. You're strapped for cash. How the hell could it be that my management team actually makes their numbers and I don't have any money? These 4 calculations. I'm going to show you in the next example how I may have a management team where I won't give them a dime even though they hit their budget targets. Because what I do now is I add these 4 calculations and you're going to see what happens. So let me take us back to the screen. And here we go. Well, actually, it's not the next screen. It's a little further down when I go food costs. Sorry, I got ahead of myself. I got so passionate and excited. So let's talk about where those inventories come from. And then when we walk through sales and all that stuff, we're going to get to the screen where I'm going to show you where I wouldn't bonus the managers. Inventory. Well, I need an inventory system that is shelf to sheet. All too often, you guys set up your inventory systems in a really bad way. You have somebody walk in, you set up your inventory like this. You grab a clipboard, you have all your products in order. First item says milk. Chef, kitchen manager, walks into the walk-in cooler, says milk, and does this. Milk, 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 milk. Right? Inventory. I hear it all the time. Oh, I couldn't possibly do inventory on a weekly basis. It takes 4 hours. Do you know why it takes 4 hours? Cheese, American cheese, American cheese, American cheese. Oh, American cheese. That's not a system. We teach shelf-to-sheet inventory. Let's say I buy potato wedges and I've got a 30-pound case. It lives in my freezer. On the second shelf, 5th position, so 1, 2, 3, 15th position, 30-pound case. That's where I'm gonna put it in the 15th position, shelf to sheet, 30 pounds, and that price. I'm gonna count it by the case. In the reach-in cooler, or freezer, I should say, it's 5-pound bags. I broke down that 6 5-pound bags, I put them in there, and I have it in the 18th position. I'm gonna count it by the 5-pound bag. I could have it on the line by the ounce. Oh, and next to it, I could have 5-ounce portion bags of potato wedges. I'm going to count the product the way I see it, in the order I see it. I'm going to have fast, accurate inventories. Fast. I have $4 million restaurants who do inventory in under an hour every single Sunday. Now, don't get me wrong. It's going to take 46, let me go backwards. That's recipe cards. Take you 20, 30 man hours to set up a shelf-to-sheet inventory. You're going to screw up 3, 4 times until you get it right. But once you do, you're going to have it so easy that you grab walk-in cooler, hand it to 2 people who've been trained to count, go count that. 2 people dry storage, 2 people freezer. You've got multiple people helping you in under an hour. You have counted and put it into your system. You know your numbers. Critical. Got to have shelf-to-sheet inventory. So let's go back to the slide and I'll show you how we set this up. So again, flounder being the first position on the shelf in the walk-in cooler, cooked shrimp in the second, and so on. Pounds, the unit, how I want it counted, and look at the unit price. It needs to be the price in which you want it counted, right? So if I'm going to count this by the pound, it needs to be pound price. If it's going to be a case, it needs to be case price. This way, we no longer have inventories with $30,000 in shredded cheese because somebody counted ounces and it was a case price. Once we do that, since we'd have all of our products categorized, we need to total it up that we may be counting janitorial paper and so on, but what I need to know is that I have $88,500 in food product on my shelves because I need those as a beginning inventory and an ending inventory. When you order, make sure you're ordering by your purchase unit, whether it's catch weights, by the case, by the broken case if it's an each. Know the cost. And in this case, this is a very simple clipboard system. I'm going to again show you later how we can simplify this and make this much easier in our software. But you want to make sure you use the circle system. On the left-hand side of Tuesday on mushrooms, the first one, that's how many cases I have on hand. Now I'm going to have a par level, whether you put it on this sheet or you have a separate sheet. I know my par level is 3 cases. I'm going to order 2. Very simple clipboard system. Again, I'm going to show you in a little bit how I can make this even easier for you and tie budgeting to it. But make sure you show a month worth so that you can see if you're over ordering. Without any great huge systems in place, anything complex, I can see very quickly. Now I circle it. When I circle it, it means I've moved it to a purchase order. A purchase order is a sheet that has the purveyor name, sales rep, phone number, order date, delivery date, and everything I've ordered. This way, when the order comes in, I can check it for accuracy, for quantity, for quality, for price, and get things fixed. So whenever you place an order, make sure it's at the back door on a clipboard, because often the person who checks in the order is not the person who ordered it. This is very critical. Is this difficult? No, it's easy. And again, I'll show you later how we can simplify that. Next, the cost of goods sold, we need to make sure we track our sales. Right? You got to track your daily sales, your accounts payable, such as sales tax, gift cards sold, catering deposits. You got to know your discounts, how the cash came in, your credit card deposits. Why? We're going to pay sales tax. We're going to reconcile our deposits to keep honest people honest, not have managers ding us. We're going to track our labor costs, our cost of goods sold, know our cash controls, all of this from tracking. Now, in doing so, remember we talked about gross versus net sales. So you have to understand when you're tracking this information what the difference is between a comp and a void. Often misused. A comp is when you discount something, meaning it was a promotional item. It was you took care of guests because they had a bad experience, bad food, took care of guests because you love them. If it got delivered to the table, made and delivered, and you're taking it off their ticket, that's a comp. And remember, comps allow chef and the bar manager and GM to have the gross sale appear. There is a line item called discounts. So we can calculate our prime cost properly. If you drop a product, that's not a comp, that's not a void, you put it on a waste sheet. Then we've got a thing called a void. What is a void? A void is a mistake that isn't made. Server double orders something, runs back to the kitchen, goes, don't make! Needs a manager to remove it from the ticket. It was never made. That's a void. All too often in our industry, we're using voids as comps. And understand, if you use a void as a comp, chef's food cost is going to be too high because you just took the gross sales out of sales. The transaction never happened. Now, you could also have, she ran back, the server ran back, don't make. They made it, but it didn't go out. It may go on the waste sheet for product loss and voided because it never got delivered to the guest. Why do I need to know these things? Again, to reiterate, if I'm voiding instead of comping, I'm using voids as comps, then I will have wrong numbers. You will be unfairly managing your management team. We don't want that. Now, end of day, you want to track these numbers. And here's how it would look like. You may have a spreadsheet. This is what our software looks like. You're just typing in your categories. This comes from your DSR, your daily sales report. You get from your POS system on a nightly basis. Very simple. Now, here's where I said I might not bonus my manager. Here's the deal. Beginning inventory, $3,500. Where'd that come from? Our last inventory. Plus our purchases, $22,522. Does it matter whether we paid for those or not? No. As long as they cross the back door, the threshold, it's an expense for this month. Accrual accounting, earn OUs. Add those together, it means I could sell $26,100 in product possibly during this time. Now let's say this is a calendar month. At the end of the month, the end of the period, I take an inventory and I have $6,800 in value of product on the shelves. I subtract that from $26,000 what I could sell. I have $6,800 left. It means $19,299, basically $19,300 in product left the shelves. It's gone. How did it leave? We don't know. We hopefully sold it, but as we learned earlier, it could be wasted, stolen, spoiled, right? You could have taken it home and not put it on a waste sheet. Well, my sales for that time period was $63,000. Use divided by sales, 63% food cost. This is extremely easy. Now, again, I said some of you on this call said, I'm already doing this. Big deal. Well, it is a big deal. Number one, I know what my food cost is. Well, number two, you also may have stopped here and bonused a manager, and I wouldn't give this manager a dime. If you look at the bottom, you'll notice the budget target is 30%. We ran a 30.61%. We lost $385 in mismanagement in the kitchen. How many of you on this call right now would be pissed off on a $63,000 month to lose almost $400 in product? Me? I'm not. I'm okay with that. We're never going to run perfectly. And make sure you subscribe to my channel right now so when one of the next webinars coming up, when we talk about calculating our ideal food cost, how I'm going to replace this screen, this slide, with the word ideal versus budgeted. And then that's a whole different thing. That's raw. That's if we followed our recipes and had no waste steps, theft or spoilage, we can measure our kitchen on how well they operated. This is just the budget. Well, I'm okay, $385 on $63,000. We're not robots. That's pretty good. Yet, I'll have managers go, hey, I'm only off a point. Well, what's a point worth? $630. What if you're a $2 million, $3 million, $4, $5, $6 million restaurant? A point's worth a whole lot of money. So don't throw around a point. Know that the dollar value, when it upsets you, that's what we care about. But now look at the bottom. My average inventory is $5,200. Inventory turns use. Remember, used line, 19,300 divided by the average inventory. I get turns. 3.72, is that good? No. In a calendar month, I want you to have 4 to 6. Breakfast place 8. Remember that from earlier. Change in inventory. My inventory went up $3,200. So while I maybe applaud my management team for doing a good job and hitting the number they're supposed to, I am not giving them a bonus because based on the $400 they wasted, plus the $3,200 they took out of my bank account, put on the shelves, that at risk to be stolen, wasted, spoiled, I now have a negative impact of $3,600 on my checking account. Let me be very clear. What does that mean, $3,600? That could be your paycheck as an owner. It could be that if you're a small restaurant, that was your payroll, and you can't figure out why you can't pay your bills. Yet your managers hit their targets. You have to look at the last 4 calculations, add those to your cost of goods sold calculations, because it's critical. You understand what pays your bills, cash or profits. The answer is cash. Cash is king. Now, so now we know how to easily calculate all this. Let's quickly recap what we learned. And I remember, for those of you who want to stick around, I have a question and answer coming up, but I'm going to show you how to do these easily inside our software. So I taught you the one number you must know. To summarize, remember, we're not reaching for a 65% prime cost. If you do $850,000 a year or more in sales, your new target is 55%. We've walked through how to calculate your cost of goods sold and added 4 calculations you can take to the bank, and we just finished on why that is so important. The importance of shelf-to-sheet inventory, that anybody can help you. Why does Chef have to be the only one to know how to count stuff? I just need people who are trained to follow shelf-to-sheet. The way you see the product in the order it appears on the shelf. Just write down a number, right? Incredibly powerful. We've got $4 million restaurants, inventories in under an hour. I'm going to talk about how to simplify your ordering process. I'm going to show you that in greater detail in a moment. And how to track your numbers to make sure you have the right prime cost, the right food cost, the right labor cost, and so on. So what I'm going to do now is I'm going to break out of this, and we're going to switch out of PowerPoint and into a web browser. So now we're going online into Smart Systems Pro, which is our online restaurant management solution that handles every aspect of your business, from a daily manager log and cash controls, online scheduling system with labor controls, complete food, beverage, merchandise for recipe cards, ordering, inventory, prep, key item reports, waste sheets, everything. That ultimately we have a weekly prime cost. Now, some of the things we talked about when we did this, we said we needed to track our information, our daily sales. Well, simply come in here, and in our system, you take that daily sales report and you take the numbers, and all you do is type them in and arrow key down. So your food, liquor, beer, wine, your accounts payable, your discounts, and it will automatically tell you what your overshort is on a daily basis. But more importantly, I've put my numbers in once to tie all of my systems together. I'm ready to calculate food cost and pour cost by category. Why? Because I'm putting those numbers in on a daily basis. You've got to get your purchases in. Now, it can be as simple as an invoice log, and I'm just going to double click here on Cisco. It can be a simplified process as how much of this was office supplies, janitorial, food, and by clicking save, I know that only $1,000 of that gets allocated to my food cost. Now, if I want to go one step further, I'd actually go into my food systems. I go to orders. Now, watch how easy this is. If I want to create an order and have all my numbers in one spot, look at this. I'm going to choose the order date. Today is a Thursday, and what happens is all my Thursday pars show up. My delivery date is tomorrow. I'm going to click on this storage location. By doing so, I'm now resorting my count sheets, shelf-to-sheet inventory, and better yet, you know what? I want to just start off with my Cisco order for the day. And now here is only my Cisco products in the order they appear on the shelves. I walk in, whether with an iPad or print it out and make a change. Watch what I do. I count what I have on hand. And look what it's doing. It's creating an order for me over here in the order column. And I know that I can't order half a case, so I can round up or round down. By doing so, I'm just going to click next. I'm not going to put all of a sudden I've got a purchase order. This is what I'm going to order. And later down below, we haven't gone over here, is I actually can show you what your food cost or your budget is up to this point. That if my order was over $3,500, I've got to edit it. Now watch this. I'm going to say that the order was placed. By doing so, it locks the order, and you as an owner or manager can come in and see that not only was the order placed on time, on budget, following PARS, but it was placed. Now what it also does is opens up this manual price compare. You can upload your invoice if you get it by spreadsheet, and this will automatically happen. Otherwise, I can come in and I can put in my variances. The system thought I was supposed to pay $42, but I had $43 on a case. I know I paid 50 cents a case too much. I ordered 2, but I only got 1. And I can make my invoices match my purchase order. Once all of that's put together, I simply click Update Invoice Log, put in my invoice number and the date when that order came in. And by clicking Save, guess what it did? It just did that invoice log entry. It also updated all my prices, so all my recipe cards are up to date, my next inventory is up to date, my next order is up to date. How about inventories? Again, I'm moving through this quickly. I just want to show you how easy this can be. To create an inventory, I click on a plus symbol. I choose the date I'm taking the inventory. I'm going to do this one. Normally it would be on Sunday for me. I can decide whether this is done for an order or inventory or both, meaning I could have pre-populated all my counts with my inventory I took on Sunday for my Monday order. I just use this. Well, here's what I do. My inventory is set up shelf to sheet, walk-in cooler, line cooler, and so on. If I open this up, you'll notice in the first position is ground beef, next is berries, whole milk is third. So when I want to make a change to my inventory, I want milk to be counted first. Watch this. I drag and drop milk to the first position, and it reindexes. So now milk is in the first position when I start counting. If I want to move it back to the third position, I drag and drop. I come over here and I count. Look at this. I'm counting ground beef by the pound. I weigh it. I had 5.5 pounds. My strawberries by the pounds. I had 1 pound. Whole milk by the 2 gallon, the purchase unit. Wait, you know what? I've got it in a pitcher, and I'm going to change it to a usage unit, which changes it to a fluid ounce, and I have 14 fluid ounces. On the fly, I can change it that it's accurate, the way I see it. Did I want to inventory this by the purchase unit, the storage unit, or the usage unit? That easy. Now wait, let me show you the power of this. I'm going to look up, let me save this. I'm going to look up potato wedges. And look, in my walk-in cooler, potato wedges live in the 5th position, and I want to count it by the 30-pound case. I have 7.5 cases. It's $322 in product. I'm going to go in my reach-in cooler. I'm going to find potato wedges live in the 4th position by the 5-pound bag, and I counted 5 bags. Save that. I'm going to go to my line cooler. I find potato wedges live there by the usable ounce, and I count 48 ounces at $4.29. And last but not least, I could have it right next to it, but in the freezer, I've got 5-ounce portion bags. Actually, here are my prep cooler. Here we are. Prep cooler, 5-ounce portion bags. Right? I have a batch recipe. I can count how many, in this case, the storage unit is 50 bags. You know what? I'm going to change this to the portion, which is a single bag, and I count 25 bags at $21.50. We simplify and speed up the process by simply having a shelf-to-sheet inventory. The product, the way I see it, in the order it appears on the shelf. Now, as I do so, I come down to the bottom. You'll notice it totals things up. So let me go out of this and do a completed inventory so you can see what I'm talking about here. I'm going to choose the 11th. I'm going to scroll all the way to the bottom, and here's how much money I have on each shelf. If I had kitchen supplies or other things, they'd be totaled, but all I care about is this $6,400 for my food cost calculation. Here's the payoff. I've got what did we do? We made sure we tracked our sales. We put our invoices in. We ordered in the products so we know and we're on budget and entered invoices that way. We know our inventories. It brings us down to our prime cost tab, to cost of goods sold. If I have put all this information in, all I do is pick 2 inventories and I'm done. Let's make this easier. Let's just show us food cost, not all of it. And look at this. Beginning inventory plus purchases. Total available minus ending gives me use. Use divided by sales gives me my food cost. Average inventory turns. This is for a week. So multiply that out. This is over 6 turns. This is a really good restaurant. My change in inventory went down. My budget was this. I should have used this much money, $10,900. I actually used $11,000. I mismanaged $218. Wait. How about let's put this all together? We talked about the most important number you must have is called prime cost. So I'm going to run a prime cost budget variance report for last week because I put my numbers in once. It's all here. Here are my sales, my actual sales versus projected sales, and I sold $3,000 more. Well, pretty good. Cost of goods sold, I'm $218 over budget. $24 was on waste. I really should have had a higher waste sheet. Are we controlling this? I lost $219 this week alone in food costs. My labor cost, I was over budget by $49, $107 in labor, $210. Wait a second. If we look at this, I come down, my prime cost, right? If we look at this, our projections versus our actual, our target prime cost for the week in this demo restaurant was 50.89%. I actually came in at 51.64. That doesn't sound so bad, does it? I lost $461. My management team lost $461 this week. That doesn't sound like a lot. I multiply that by 52 weeks. That's $20,000. Do you understand? Now what do? Because I made this change this week, I go find out why my food cost is high. I make changes in order to get this $200 back without affecting my guest and what have you. This is huge. Now let me take us back into the PowerPoint. And let me tell you, we're going to do question and answer in just a second. Bear with me for the next 5 minutes. For those of you interested in taking your business to the next level, I want to share with you a little bit about what we do here at therestaurantexpert.com. We are a restaurant training and coaching company that has software as a service. So we sell, or you invest in what's called a winner circle membership. There's no sign-up fee. There's no setup fee. It is no long-term contracts. You, in fact, could sign up with me and give me 30 days notice and you're out. You can break up with me like you're dating in high school. David, it's me, it's not you. That's fine. What do you get? You get our software, Smart Systems Pro. Extremely powerful software, putting everything in your business at your fingertips. It's cloud-based. As long as you have internet access, an iPad or a computer, your phone, you have information at your fingertips. Free unlimited training support. This is literally Monday through Friday, 9 a.m. to 7 p.m. Eastern Standard Time. Call all you'd like. Weekly webinars to teach. Free software training. We do 2-day classes here at our office in Phoenix, Arizona, free of charge for you and anybody you want to bring to learn the software. We understand your investment is to get here, but the investment is huge, the payoff. You get access to me or one of my coaches. 1 hour a month. We'll put your budget together for you, with you. We'll help you re-engineer your menu for you, with you. We will teach your managers cost of goods sold. We'll talk you off a ledge. We'll help you with every aspect of your business. And oh, by the way, we're not attorneys. We're not accountants. We don't punch a clock. You need extra help? Pick up the damn phone and give me a call. Guess what we're going to do? We're going to help you. Now, if you become a real pain in my ass, I'll tell you to move up with membership levels, but we understand you're going to need extra time in the beginning. So imagine having a coach over your shoulders. Let me be very clear. I was a collegiate athlete, and when I was in tip-top shape. I'm now 50 years old. I work out in the gym, but I don't have anywhere near the results I had when I had a coach over my shoulder making sure I was doing the right things to make my body the athlete it needed to be. So understand, all of us need a coach. It is extremely important that we do so. Restaurant training products. We have over $8,000 in training products, all digitally downloadable and included in your month-to-month membership. There's nothing more to buy. These training products are like having your own corporate systems, but they're customizable to you. You also get workshops, seminars, and live software training. I do a 3-day workshop twice a year. The next one, depending on if you're watching this as a replay, it's actually happening next week. Those of you who are interested, make sure you give us a call. We still have some seats available. We do single-day seminars, 4 of them a year here at our office, free of charge for you and a guest as a member, and the software trainings. All this is included for only $347 a month. That's it. But if you act now, if you call our office and ask for Greg, our solutions coach, he's at extension 106, and you say you were on this live YouTube event, this webinar, we're going to give you the opportunity, if you sign up now, today, I'm going to give you an $800 a month value, a $4,800 total, 6 months of one of my team working with you and your management team on a weekly basis, holding your managers accountable, working with you and them to implement your systems, helping you move forward step by step by step. This is tremendous. If you really want to take your business to the next level, if you want to not crawl, not walk, not run, but sprint to success, we can take what is normally a 6-month to a year journey and shorten that and make sure you've got the right things in place. So if you decide you want to sign up with us today and you call Greg at 106, for $347 a month, no sign-up fee, no setup fee, month to month, we are here to help. Now, I know we've got about 3 questions so far. If you've got any questions, type them in your YouTube chat window, and Jenny Brooks on my team is going to help me gather those questions and help you help to answer them for you. Do know Greg is no longer on the chat. I can see his line is already lit up. We've got somebody already taking advantage of wanting to join. But Jenny, what are some of those questions we have here? We've got from Alan, a small restaurant that is less than 2 years old. Is there a less automated system that we can implement? An easy system that does not require an expensive hardware or software? Well, you know what? I'm going to tell you right now, Alan, I would tell you to come to my workshop here in Phoenix, Arizona. We used to teach all this by spreadsheet. And I will tell you, it can be done. But the unfortunate reality is you're going to actually make life harder on you. That's one of the reasons why the software was created. Our members said, David, we love your stuff, but we're tired of putting the same number into 5 different spreadsheets. We're tired of management either by accident or worse, on purpose, manipulating those formulas. We don't know we're looking at bad numbers. And then when it comes to recipe costing cards, such heavy lifting. By the time we get them finished, the price of cheese changes. I got to change 20 cards. Not going to do it. And wait 3 months, 6 months, a year. Most important data out of whack for me. And so what we found, Alan, is actually by creating the software, we simplify, we actually make it easier on you. Because we're restaurant coaches, we're over your shoulder helping you and get it implemented faster. And the beautiful part is as soon as you start to see change. So your choice is you can come into my workshop and you'll leave there with my management training program with the spreadsheets you need, step by step how to do it. But I'm going to be honest with you, it's actually harder. And for $347 a month, my goal is to get you a minimum 10 times return on investment. So if you're willing to do the work, then you want to call Greg today. If you're willing to do the work, but you're not quite ready, you're not at a spot, trust me, I understand. We're not right for everybody. I just like to think we are. Then you can call them up and ask about the workshop and get your ass here because I'll teach you everything you need to know. But I'm telling you, there really isn't an easier, less expensive system. Now from Pam, we're at takeout and delivery. Can you give me an example of a loyalty program for this type of eatery? Thanks. I'm going to tell you, I am a 100% believer in loyalty programs. And the one I would tell you, if you want to have some more information, I would call Greg at extension 106. But I don't make a dime from this. A personal friend of mine, a one marketing guy that I put my reputation on, Cameron Carrington of repeatreturns.com. It is one of the most budget conscious, powerful systems out there. And so I would call Repeat Returns. If you need more information, please feel free to call Greg. He'll get them to call you, get all of your information, what have you. Another question we have from Michael is, what is the best way to track food waste? Well, make sure you look on my YouTube channel. We're going to be releasing content every week. We're also going to be doing another webinar and what have you. But the simple answer is called a waste sheet. If you email me, I'll send you the waste sheet. I'll send you the Word document. It's a clipboard system. On it is the date, the product, what you lost, how much you lost, what the cost of it is, and the reason why. And this is really, really important. In our software, not only do we give you the clipboard side, but you put it in, you type it in, and it knows the value of each product right away because it's all built in. And more importantly, as I showed you in the prime cost, it's going to show you if I'm off $200 in food cost, but $24, $50, $100 of it is on a waste sheet, I can then go run the date range on the waste sheet and see why and what my managers did to change it that it doesn't continue. Now, does anybody else, if you have any more questions, I want you to type in the question box, or I'm sorry, the chat window, and Jenny will make sure we've got it. Again, I really appreciate you all being on today's mastermind, or sorry, on my webinar, on this live YouTube event. As you can see, I'm getting used to doing things live. That's the direction everything's going. But I hope, as I see Greg, if you get Greg's voicemail because he's on the phone right now, please leave a message. He'll call you right back. But you can go online, learn more about us here at therestaurantexpert.com. You can call Greg toll-free at 1-877-457-6278 at extension 101. I want you to subscribe to this YouTube channel right now to get updates for weekly content that's coming and more webinars. And so I can work a question here. I'm going to take this last question. What's the best way to, when's the next workshop after this one? It's April. Do know we do it in April and in September of every year. We do them twice a year. So, everybody, I want to thank you so much for being on today's live webinar event here on YouTube Live. We'll probably archive this, so if you want to have some of your team go back and watch it, it will be available. I want to thank everybody. I really, really appreciate it. Again, make sure you subscribe now so that you can be up to date on all the new content on our YouTube channel and know when the next webinars are. Thanks, everybody.